So this afternoon we're joined by Andreata Muforo, who is a partner with TLcom in Kenya. And she works specifically in investment, venture capital investments. So we will be having a conversation with her around the topic of investing in technology, which is specifically what her company does and how that is a catalyst for investing in Africa. So Andreata, thank you so much for your time. Thank you for being with us. I think we will kick off with asking you to tell us a bit about yourself, and then from there go into the work that you do. Thank you.
Sure, thanks. Thanks, Nota, and thanks everyone for joining. It's good to see everybody here. So, as Nota said, my name is Andreata. I'm so originally from Zimbabwe, but I've lived in a few other countries, and currently I live in Nairobi, Kenya. And I'm a partner at TLcom. We're a tech venture capital fund. So investing in tech-enabled businesses across the continent. I've been there for 7 years. I spent my career centered around kind of four themes that I'm passionate about and excited about, which is entrepreneurship, investing, Africa, and private sector development. So I've done work. So prior to TLcom, I was working here in Nairobi as well in mergers and acquisitions advisory, so supporting local entrepreneurs who are raising capital, who are selling assets, who are buying assets, so thinking about, their strategy of growth, whether it's organic growth or by getting other assets. And prior to that, I was in Tunisia, where I was working with the Africa Development Bank, looking at the bank's investments into private equity funds, as well as just debt into several other projects. And I actually also had the opportunity to work with President Kaberuka while he was president at the time. And then prior to that, I was in business school. So I went to Stanford Graduate School of Business for 2 years. And my ambition then was to come back to the continent and also just to solidify my knowledge, my network, as well as just the business and networking and leadership experiences that you can acquire from business school.
Thank you, Andreata. That's a very full CV and going on. So you work specifically in venture capital. And for those of us who may not know what that is, could you give us a crash course in what venture capital is? And hopefully maybe take about 5 minutes explaining what this is. I think specifically, I've come across terms like valuations and exits. So can you explain to us what those mean? Thank you.
Sure. So basically, venture capital is a type of it's money that you use to fund businesses. So if you think about a business, so say you're starting a business, there may actually be entrepreneurs on this call. You can either get capital from, say, yourself, from your own savings. You can get capital from your friends. You can get capital as a loan from a bank, or you can get capital from another institution, which is, in this case, that's when private equity funds or venture capital funds come into play. So these are essentially institutions that are set up to invest in private companies most of the times. So we invest capital, cash into private companies, and we get shareholding in those companies. So it's not a loan. The way we exit is when you sell the business or you sell your stake of the business. So we also get involved in sitting on the board of companies and supporting the business as it thinks about growing. So it's really it's an equity investment into a private company. And then within that sphere, there are different types of capital that comes there. So there's private equity funds, which maybe you've heard of, the likes of Helios, Carlyle, Catalyst Fund. Those are some of the funds that are quite active on the continent. And these ones are they invest in businesses that are much later stage. So businesses that have positive EBITDA, so they actually have earnings before interest, tax, and depreciation, and they're steadily growing. And then also sometimes they also invest in SMEs, so small medium enterprises. So the difference between that and venture capital is that venture capital, we're investing in high growth companies. So these are companies that can go 100, 200 north of that year on year. And businesses that can typically do that are businesses that are fueled by technology. So if you think about, for example, maybe I'll use a company that everybody knows, say Google or Facebook. When they got started, Mark Zuckerberg was looking for capital, and he went to VCs, venture capitalists or VCs in Silicon Valley, and they invested in his company. So this is a company probably with no revenues at the time, so of course no profit, but an idea or even maybe just a product. And then you look for people who can believe in that and that can see the potential of that opportunity. So we're really investing in companies that have potential for high growth, and also so many of them are not making a profit yet. And so that's the space we play in, which, as you can imagine, is fairly high risk because the idea may fail, or actually it can do really well and deliver what's called a unicorn, which is or anything which is $1 billion company, or even just a company in the hundreds of millions of dollars can be quite significant. So that's essentially what we do. And then part of also what we do is so it's not just about providing capital, because that's an easy initiative. You can write a check in 5 minutes. Maybe you do the process over a few weeks. But what we really do is to provide business building support to the companies that we invest in, because they're fairly early stage companies, so they're also quite fragile in some respects, and many times it's first time founders. So just needing the support that we as venture capitalists can give them, whether it's when you're thinking about expanding to new markets, hiring, strategy, really thinking about how do you get a focused strategy. So a lot of the work is around that, like value generation, business support activities that we provide to the companies.
Okay, so you've said that you invest in high growth companies. How do you access the capital to invest in these companies? And I think on the other side of that, why have you chosen technology-based companies in Africa?
So the capital that we invest, we actually get from investors who invest in us. So I guess it's like a food chain, right? So at the top, we actually spend quite a bit of time raising capital into our fund, which we then use to invest into the companies. So we actually also have our own strategy around, okay, what are the types of companies we're looking to invest in? And then we sell that strategy to investors, because as you can imagine, when you're raising a fund, you don't have a company you've invested in yet, unless maybe it's your second fund. So you sell this strategy to your investors, and then they commit to give you money when you find companies to invest in. So the typical structure is that our fund has a life of about 10 years, and then plus 2. So so we tell the investors, you give us this money, we'll invest it within a 5-year period. We'll help and support and to build these companies for the next 10 years. And then within 10 years, we will exit the companies. And it's at that point that you as an investor, you get a return. So this is long-term capital that we're talking about. So it can be that my investor is somebody with, say, I don't know, $100,000 that they'll need in 2 years. No, this is money you're parking for at least for 10 years at a minimum, And so So in our fund specifically, so we've raised $71 million, which by the way took quite a bit of time to raise because, as you can imagine, so the Africa VC space is quite nascent. It's fairly early. When we started, so I joined TLcom in 2013 to start the fundraising process for our fund, and at that point there were very few people who believed in the fact that you could actually invest in Africa tech businesses, because traditionally what you see is it's either there are people who invest in Africa, so these are people who are investing in roads, investing in buying apartments, infrastructure, buildings, stuff they can see and that they know, Safaricom, telcos, but no one was looking at this space. And then on the other side, the people who understand tech and VC, which is Silicon Valley, Israel, they don't understand Africa. So it's like a complete overlap of, finding that intersection of somebody who understands this. So it took us quite a number of years to raise. It took us almost 3 years to raise the capital that we have now. Our investors are mainly development finance institutions. So we have the Africa Development Bank, we have CDC, which is the UK DFI. We have EIB, the European DFI, Propaco, the French DFI, Bio. And these are and then we also have an asset management company out of Nigeria and some high net worth individuals. So you can imagine these are very bureaucratic institutions, so the processes tend to take quite long. There are also other funds on the continent, so we're not the only ones. So some have raised from other DFIs, others have raised from other high net worth individuals who are typically outside of Africa. We literally have, I think of our 8 investors, we have 2 that are African. And then in terms of why we've chosen tech, it's really it's your typical kind of venture model in the sense that we are making a bet on high growth companies. So these are companies that have to be very, very scalable. It can't be a manufacturing plant where if I need to double my revenue, I need another factory and then another factory to triple my revenue, right?
Yeah.
Which is like steady growth, and that's all fine and that's legal, that's legitimate, but it's not venture capital and it wouldn't deliver the type of return that we're looking at. So the kind of the enabler for significant high growth is technology, because it has a multiplier effect. So that's why, because tech allows you to scale. I mean, when you think about venture capital, traditionally, it was really around software businesses, where after you've built the product, you're just honestly just creaming the revenue because your gross margin is fairly high. And if you wanted to double revenue, maybe you carry like 20 to 30% of the cost. You're not carrying 70% of the cost. So technology is what allows you to do that.
Okay, thanks. So you've touched on a couple of points, and I would like to delve deeper into some of them. So you've talked about who invests in you to allow you to invest in these firms, and that the majority is outside of the continent. So can we talk about some of the gaps in access to funding for the work that you do, and what can be done to improve investment coming from within the continent? And then the second thing you've said is that you've chosen tech specifically because of the multiplier effect on scalability. So can we delve into, I guess, which sectors specifically within tech you think, which sectors combined with tech do you see this multiplier effect likely to take off with?
Sure. So in terms of the gap, it's an interesting question, and I think for things to actually come together, it's going to take quite a bit of time. So if I think about my space, which is venture capital, and also maybe also the best way to look at it is if you think about private equity funds. So these are the funds I was describing earlier, the ones that are investing in companies that have positive EBITDA, so they have some profit that you can think of. So that market was it's in Africa now, it's about 20 years old, and the players who seeded that market are DFIs. So these are fundamentally institutions with a mandate for Africa. So their money can't go anywhere else but Africa.
Yeah.
And then over time, you're starting to see either private investors or high net worth individuals on the continent who are investing, but they're still, few and far between. But I think on the private equity side, which you would think which actually is less riskier than what the type of work that I do in venture capital. Even in that space, there's very little investment from African institutions. And when you think about it also from if you think about, say, the DFIs, where is that money coming from? Or even just some people have also managed to raise from pension funds in the US and in Europe. It's so the money the money lies there, right, in the pension funds. So first of all, we need larger pension funds, and then we need the pension funds on the continent to be able to be given leeway to be able to invest in our space, which is perceived to be riskier than buying, say, government bonds, which is what most pension fund managers do and know, and are compensated for. So I think there's quite a bit that can be done in regards to thinking, working with it's more around policy, and then also the government seeing the value in what we're doing to then channel resources that way. So I think most recently there's a fund, it was a very small amount though, the Nigeria Sovereign Wealth Fund invested, it can't be more than $1 million, but in a seed fund in Nigeria. So it's things like that. So if we had more sovereign wealth funds on the continent investing in this space, being given the leeway to invest in this space, then we can see I guess greater catalytical role at play in getting more capital. I think for me right now, I'm just happy that there's capital, right? Because 10 years ago for my space, maybe even 8 years ago, there was no capital. So I know there's a lot of conversations around Africans are not getting, to benefit from what's happening in tech. I think part of it is because capital is not coming in, but I think the first step is there's capital. So I think if the capital can show that you can make an investment, you can actually get your money back, then the other capital will come. So, success will breed more success. So I think it's also just a matter of time as we get successes in this space. And then the second question around kind of which sectors we look at, maybe I can talk a bit about our strategy there. So for us, we're actually sector agnostic. As long as it's a tech-enabled, scalable business that we can potentially exit, with high growth potential, we would look at it quite closely. And the reason why we don't, at this point, we're not specialized is because the ecosystem is fairly small, right? So if I say I want to just invest in ed tech in Africa, you find that there are few companies, which means I won't get the best quality because of the kind of the high risk, high return nature of venture capital. I need to invest in 1 to 2% of the entrepreneurs that I see. So that means I need to see more entrepreneurs. So we're fairly sector agnostic at this stage. I don't know if we'll ever actually, lean towards a particular sector, because also what you find in Africa is that a company starts in Kenya, then it goes to Uganda, then it goes to Nigeria. A company starts in Nigeria, then it comes to Kenya. So if I'm doing education, if I invest in a company in Kenya, then in Nigeria, then they will be in each other's markets, right? So if I look at maybe also maybe another way to answer this question is to think about what spaces have we invested in and that we see that are promising. So there's a space around what I would call kind of fixing broken verticals. So you find that on the continent, there's a lot of fragmentation within the ecosystems. So we've invested in a number of companies in this kind of vertical fixing space. So we've invested in one company in agriculture, in the agriculture supply chain in Kenya called Twiga, which is fundamentally disintermediating the supply chain from moving fresh fruits and vegetables from farmer to the vendors. because you find that a banana in Nairobi that came from Meru, which is, you know, I don't know, 100, 200 kilometers away, is more expensive than a banana in Houston that came from Ecuador. Why is that? Because there's a lot of middlemen, there's a lot of post-harvest loss. They're really kind of trying to fix that supply chain. So that's agriculture. We've invested in logistics. So there's a company that we've invested in Kobo in Nigeria, which is really aggregating trucks and connecting them to industries that want to move goods. Because you find that in Nigeria, I think the company with the most trucks has 700 trucks. So can you imagine the largest economy in sub-Saharan Africa? Yeah. And the amount of goods that have to be moved. So there's a lot of inefficiency around that. So we've done logistics. We've also done an investment in kind of on the consumer side in education, in ed tech. So basically, it's a tech platform that's allowing learners to learn sciences, engaging on their app. So we've also done education. We've done fintech. We've invested in a company in Nigeria called Okra that's providing kind of API platform for fintechs to be able to link to bank accounts. We've also done some investments in business services, so companies that are helping businesses work better. So one company here called Ajua, another one called Terragon. So there, and then also right now we're looking at a company in health tech, and then another one in insurance. So it's quite varied, and the opportunities are many, as you can imagine, right? On the continent, there are so many problems to solve. And so for us, actually, when we think about an investment, this is actually an interesting point. The criteria that we look at, or kind of how we assess an opportunity, is kind of trying to answer questions in three buckets. Is this a good market? Yeah. Is this a good company, and is this a good investment? So in the market, we're looking at large, expanding, and growing spaces. The company, we're looking at the team, the business model, the team's ability to execute on that business model, and how that business model fares with other models. And then on the investment, this is about the terms. So whether it's valuation, the kind of rights that we get. So this is a simplistic way of describing the entire process that we go through, but those are fundamentally the three buckets that we look at.
Okay, thanks. So now, speaking of the work that you do and the various sectors that you cross, and you are also venturing into health tech as well as one of the sectors, what role is COVID-19 playing in how you continue to engage with startups? And how do you think it's disrupted the work that you do, or is it actually come at a time where, I guess, tech-enabled companies can kind of leverage off of this momentum and the needs to actually perform better?
Yeah, so it's a good question, and I guess quite pertinent to the time that we're living through now. So I think from the businesses, let me talk from the entrepreneur side and the impact of that. So there are positive outcomes of this, actually, and then there are also some negative outcomes. So I think the positive, I can start with the positive, is around the acceleration of digital transformation of companies, right? Because our thesis is around how do you use technology, how do you leverage technology to provide services across the continent. So there needs to be, if it's a business, so as an entrepreneur, you need to have a business or a company client or a consumer client that buys into the service you're providing. So what we've seen with COVID is that, for example, with the limitations around restrictions around movement, and people just being conscious about where they go, if they need to go, and just transacting more online, we've seen a lot more people are on the consumer side are more comfortable with transacting on a mobile phone. So e-commerce, last mile distribution has grown significantly, at least in, in the markets where we operate majorly, Kenya, Nigeria, Ghana, South Africa. So you see a significant uptake in, e-commerce and building of trust. Because I think one of the major challenges in Africa is trust. Like people don't trust institutions and vice versa, right? Yeah. And what this COVID has done is like, it's catapulted us like 5 years into the future in terms of people's ability to become more comfortable transacting over the internet. So that's on the consumer side, and then on the business side is also an acceleration of business. So like we have companies that sell to businesses, and many businesses, so if you think about banks, insurance companies, restaurants, have also been kind of jolted out of their sleep, especially banks and financial services, for example, because some of our companies operate with them, where now they need software platforms to be able to interact with their customers, interact with their employees who are working remotely. So suddenly, we invested in one company that's in marketing, digital marketing, and another one that's in customer experience. So suddenly those services that were taking so long to move through the pipeline, the banks are realizing, oh gosh, we actually need this quite urgently because our consumers are no longer coming into the branches, and we need the service to be able to communicate with them. So I think I think we see that on a number of spaces. So there's that positive acceleration. On the negative side, it's more around, I think, the short to potentially medium term impact is that the companies are impacted from a liquidity standpoint. There's a revenue crunch, there's fundraising crunch, people are losing jobs, so people have less disposable income. So there's a significant kind of income challenge globally. So Twiga, for example, sells fresh fruits and vegetables, whereas before maybe they could sell, I don't know, layer that with tomatoes, grapes, strawberries, just as an example. Now people are not buying grapes and strawberries, and they're buying 5 bananas instead of 10 bananas. So because the consumer spend is going down, so even if you're in essential services, you're also impacted as a business. Yeah. And then I think also just many of the companies are having to deal with remote work. Like how do we get our people to be productive and to maintain? I think productivity is not necessarily the issue. It's more around kind of culture. How do you maintain culture when your employees are working remotely? And then also just, some number of operational limitations. So those are more short-term impacts. So hopefully when this washes over, tech-enabled companies are able to benefit from kind of the digital acceleration that we've seen come out of this crisis. And then from an investor perspective, so for us, myself and I guess generally the investor community in the beginning, so like March, when it kind of hit really, when some of the new cases were popping up on the continent, it was a question around now how do we work, because we can't travel, we can't meet entrepreneurs, there are all these lockdowns. So we were thinking on one side around our portfolio companies, like how can we help our companies, because some of our companies need help. Some were fundraising. And then, if investors were coming from US, they can't travel anymore, or Europe, or some investors just got cold feet and said, we're not investing anymore this year. People have different appetite. So first was to kind of triage our portfolio and see what's the impact on our portfolio. And then after we've supported our companies, then to think about, okay, so how do we make new investments in this new world? And what's hard to do, I have to admit, is to make an investment in an entrepreneur I've never met. Yeah. That's very difficult for us to do. And thankfully our fund, so I'm in Nairobi, and then we have another partner in Nigeria, which is where most of our companies are and most of the deal flow is coming from. So I can, wear a mask and go and meet entrepreneurs. So we're still active and we're still investing. We're in the process of some investments now. But it's now that, my other partners, they can't also meet these companies in person. So the entrepreneurs we had interacted with, that's easier to do and that we know. But if it's a new person, it will take a lot more to kind of build trust, understand the business without going on the ground.
Thanks. You've talked a lot about trust, I guess. So it's a chain of trust coming right down from the people that choose to invest in you as a venture capital firm, you choosing to invest in businesses, and then trusting that they will multiply, and then trust within the business community as well. What role does government play in this environment? And I guess looking at the trust issue, like what can you trust governments to do and not to do that make things like venture capital investments a worthwhile thing that are likely to become, I guess, more widespread over time?
Yeah. I think, when I look at the ecosystems, I think where government has been, okay, my general, view is typically that the government should be an enabler and should continue to play that role on many fronts within kind of creating a business environment where young entrepreneurs can easily get off the ground and just not face challenges that are not, they're not worth facing, like if it takes 60 days to start a business, what's that, So, government should enable such things. I think when I think about, so say, for example, the Kenya ecosystem, I think in the early days, the government did play a role in kind of stimulating and helping to seed some of the hubs and supporting some of the hubs. I think, there was NILAB, which, for example, was making some investments. The government, I think, gave them $1 million or so to, make some investments in early entrepreneurs. And also, actually, my partner in Nigeria was the former ICT minister under President Goodluck Jonathan. So her name is Ndepebo Bola Johnson.
Yeah.
And she did a lot of work in just like getting fiber. So doing the broadband master plan for Nigeria, getting fiber to Yaba. That's huge and transformational. How can you be a tech entrepreneur without the internet, without electricity?
Yeah.
It's just really difficult. So and then also she helped seed a VC fund and some tech hubs as well. So I think there's a role for government there that the government can play. But I think if they can most of the times I'm like, if they can get out of the way and not be more supportive than to be placing roadblocks, which I think unfortunately most of our governments tend to do. Because I think this, for me, this space is quite critical for Africa because we have such a young population, right?
Yeah.
And where are the jobs coming from? They're not coming from the traditional businesses who've been there for a long time, and jobs are not, being created in masses. So then why don't you stimulate the entrepreneurs to be able to build these businesses? So for example, Twiga Foods now employs 500 people. These are 500 jobs that were not there 3-4 years ago. Yeah. So if a government has the foresight to see that, okay, how can I actually be an enabler of this ecosystem? I think we do stand to benefit quite significantly.
Yeah. And then you also talked about investing in entrepreneurs you haven't met. So how does COVID-19 impact how you choose your investments going forward? Do you think you'll need to re-strategize how you do that? Because there's so much uncertainty around how long this current environment will last, and if going into the future there's a lot of talk about the new normal. So what do you think might become the new normal for venture capital?
So for us, we've taken the view that the long-term tech opportunity on the continent is still there. This is kind of bump in the road. So the question is, how do you? So we don't want the ecosystem to regress. I think I was saying in the beginning, it's a very young ecosystem. So I think we don't want the ecosystem to regress. And then also there's still opportunities that one can get can get even through a crisis, right? So if you think about it, if we find a company that we like really, that we like and we invest in now, very few companies have capital. So if you have capital, you can be, and you're executing well, you can be a winner. So even through the crisis, maybe the growth won't be as significant, but coming out, you may be one of the few players left in your market and in your space. So we're still quite positive about investing. Of course, we invest with a keener eye on knowing what's the impact of COVID on the business. Is this a business that will be irrelevant post-COVID? And so thinking through how has COVID really impacted your business, and and also what are the opportunities are emerging, out of this pandemic. So I think we're still quite positive about the opportunity, the investing, even in this crisis.
Okay, but given the countries you're in, so at the moment you're in Kenya and Nigeria, South Africa, and Ghana. Do you think there's an opportunity to expand out into other markets, and what might those markets be? So I think as an add-on to that, do you see any emerging markets on the continent outside of these four?
So actually, we actually have two African offices. So it's Kenya and Nigeria.
Mm-hmm.
However, our strategy is sub-Saharan Africa for our first fund. For our next fund, we may think about North Africa as well, because we're now seeing some North African businesses looking into sub-Saharan Africa. But in terms of why we're in these spaces and what our plans are, where when you look at our deal flow, the majority, about 60 to 70% of deal flow comes from Kenya and Nigeria in our space. Okay. And then about 25, then you add maybe another 20% coming from South Africa, maybe 15 to 25%, and then the balance is the rest of Africa. Mm-hmm. So you find, and then within that, so the first tier in terms of deal flow, and I think also it's a reflection of the maturity of the ecosystem, is those three markets. And then the secondary markets are Ghana, Uganda, Cameroon, I've seen stuff, Ethiopia, I've seen stuff, Ivory Coast. Okay. So those are kind of like the secondary markets. And then everything else follows. Maybe you see an opportunity every now and again in those markets. So I mean, for us, I can invest in a company in South Africa from Kenya. That's not an issue because many of our companies are also expanding to those markets. It's just that the markets where there's a lot of activity still remains, because even when you look at Africa wide, you just add Egypt, right? So it's South Africa, Kenya, Nigeria, Egypt, in terms of where the activity is.
So we have a question from Catherine Wangi, who is a member of the group, and her question is, how can African governments take advantage of the fourth industrial revolution to contribute to the achievements of the Africa Free Continental Trade Area goals? Do you have any thoughts on that?
It's a very broad, broad question. You could write a paper on this. I think for me, and it's a bit of some of the stuff that I had said earlier, is really around kind of having spaces within governments where they're thinking quite actively around how do we leverage technology on our continent. I think for a long time, African citizens and then African businesses have been consumers of technology from other places, whereas now we need to be developing and consuming our own technology. And then also, the opportunity is not just for technology in of itself. It's possible like that the next, drone technology will come out of Africa. I highly doubt. But the question is, how do you leverage those technologies to solve the problems that you have? Because we don't want technology for technology's sake. There's enough phones. China is doing a good job of manufacturing, and Japan and all these other places. But the question is, the innovation is really around the business models. So how do you leverage this technology to solve our problems? Like how do you use technology so that it's relevant to your grandmother in the village, to your cousin in I don't know, in Harare, in another place, right? So I think if governments can start to think about this, and then I think also leverage this for employment, because we have such a young population, and technology helps. If you think about catapulting and increasing access to services, decreasing cost of offering service, technology can help you do that. And I think you can really leverage technology to create employment on the continent. So if governments can think about that and see how to support, whether it's funds, whether it's accelerators or incubators, or just companies that are focused on that, I think that's where, I think for me as an investor, I think there's some gains we can get from that.
Yeah, it's interesting that you say that it's time to consume our own technology, because earlier on you were talking about Israel and America, for example, having the capital but not understanding the African market. So it would be interesting to have a dynamic where you have investment coming from the continent, but also the technology coming from the continent, where there's some alignment. You've talked about the portfolio of the investments that you get. I guess what needs to happen to have more people from the African continent investing in these technologies that are developed in the continent? So for example, I think people like us who are on the call at the moment, like what role do we have to play? How do we feed into systems such as venture capital?
Sure. I think the easiest way to get plugged in and to put your money where your mouth is, and as I'm sure this is a community, I would imagine, of people who are real change makers. I think one piece could be around angel investing. So what are angel investors? So angel investors are people who invest some of these startups at a very, very early stage, and you can come in with smaller checks. So $5,000, $10,000 to support some of these entrepreneurs. And at least I know in a number, so there's a Africa Angel Network. There's an umbrella organization like that on the continent, which then members of those are angel networks in different countries. So there's one in Kenya, one in Nigeria, and in other countries as well. I think in South Africa as well. So being part of these, I think there's even one in Nigeria for females. They're female investors that want to invest in female-owned companies, for example. So if there's a way, it's called Rise Tide Africa. So the one in East Africa is called Victoria, I think, Victoria Angel Investing.
Okay.
The Nigeria one is it's ABAN. So if you can get connected to those networks, because what they do is they from their members, they take like $5,000 checks or $6,000 checks, and then they put the money in so it's like it's a proper structure. They put the money there, and then they make a commitment every year to invest in these entrepreneurs, and then they also support the entrepreneurs, because I mean, granted, this stuff is high risk, so it's so this, I'm talking about a bit of disposable income, so money you don't need in the next couple of years. And also, in all honesty, people have made money doing this, because what the thing with the angel investors is you invest early, and then when somebody like my fund comes in, usually what we do is, because we're coming in when the company is a little bit later stage, we typically, when big investors come in, they want to clean up the cap table, so they buy out previous investors. So on the continent, there are investors who've made money. So they've in a number of the companies we've invested in, some people have been bought out and they've made money actually from those angel investments. And also because you're not an expert investor, I think getting connected to a network is a safer way to learn, and then also to invest alongside, you know, so you're not just by yourself trying to figure out, okay, is this a good business? Is this relevant? But there's a network or a force behind it. I think that's one way. Another way is just maybe to support some of these entrepreneurs. I don't know if you know any within your network. I don't know what, depending on what your background is, just being a mentor to some of these entrepreneurs, because many are quite young, many are, you know, they do have blind spots. So if you can become active, just to mentor and to support some of the entrepreneurs, that's also quite valuable.
Thank you. So there you have it, community angel investments. Read up. And I think if we have any follow-up questions, we'll try and track you down. So for those who want to follow Andreata, she's on Twitter as well. I think it's A Muforo on Twitter. So you can follow her there. Gerald has a question. And I think we've touched on this a little bit, where you've said that about 75% of the companies that you're currently working with are in Kenya and Nigeria. But his question is around how you decide which markets to go into. So was that Gerald or Helen? Please go ahead.
Hi, Nomta, thanks. It was me. Yes, my question, Andreata, and thank you so much. This has really been great. I've really enjoyed learning more. You know, I thought I understood the work that you're doing, but you know, I definitely got to learn more. So thank you so much. My question is really around market size, and I you know, you did mention that 3 of the markets that you are operating in are Nigeria, Ghana, and Kenya. Now, these are fairly large markets. So I mean, is this part of the strategy of your investment thesis to say our focus would be the larger markets as opposed to the ones with smaller populations? Just, you know, obviously to get an understanding for the reasons such as, number one, are there any people who then do focus on the smaller markets if you are not currently investing in those? And then, you know, number 2 is really just to get to understand whether in the long term, you would look at focusing on smaller markets. I mean, I have spoken to certain people and they've mentioned that, hey, listen, yes, we do make investments, but we love large markets. We love Nigeria, you know, we love Ethiopia because they have the numbers. So is that a part of your strategy as well? Yeah, thanks.
Sure. So, I mean, I think we look at, broadly speaking, we look at the whole of sub-Saharan Africa, right? But what ends up happening is that the markets, the ecosystems that are developed and that are churning out entrepreneurs are Kenya, South Africa, Nigeria, more often than not. So that's where the deal flow is. So we have no problem investing in an entrepreneur in Uganda, an entrepreneur in Cameroon, no problem at all. It's just that there are not many of them as a start. And then also to your point, yes, when you do look at the market size, you find that the market alone is not sufficient. Then the question is the entrepreneur thinking outside of their market? So if you're, and this is the same case for Ghana actually, Ghana is quite small. So if you're a Ghanaian entrepreneur, you're a Zimbabwean entrepreneur, like Zimbabwe is not big enough, Ghana is not big enough. So, but it's fine to start there. So you start in Ghana, but almost immediately you need to start thinking, what is my next market? Because the way we also evaluate our investment is that it's going to take the same effort to build a $100 million company than it does to build a $10 million company. I would like to build the $100 million company. Because also in my fund, I can only invest in, say, 12 to 15 companies, right? So I'm looking for the larger opportunities as well. So if you're starting in Rwanda, the thing to do is almost immediately, you have to think outside of Rwanda. And sometimes it's the case for Kenya as well. Kenya can be small. So depending on what sector you're in, right? So I think it's about, so if it's a smaller market like Kenya, then you're looking at a regional play. if it's Nigeria, but even in Nigeria has a lot of, this currency risk. So you find that diversifying, even when you're a Nigerian company, is a good thing to do. So we're quite open, and would invest in an entrepreneur who's anywhere, but then you now need to show me where will you get this market, and then then your ability to be able to internationalize your business, and that's quite compelling.
Thank you. So you've talked about expanding your market. Is there, and we've talked a lot about Africa, is there an opportunity for any of the companies you currently invest in to expand outside of the Africa market? So to India, for example, which has 1 billion people. Do you see that potential in any of your current investees?
So yes, I mean, there is that opportunity, but what we normally advise our companies is that, so for us, we see the opportunity in Africa. So I think as a start, kind of mine this market, and when you feel like it's exhausted, then you can look outside. Because in reality, as an African entrepreneur, your advantage is on the continent. And even also me as an investor, I can also support you on the continent. That's not to say don't go to India. If you, within your strategy, there's a way you can see how you can capture that market, then you can put it in your growth plan. But I wouldn't say go from Kenya to, Indonesia almost immediately, unless that's where the market is. And then also, unless you feel that you can win, because the Indonesian entrepreneur also has a local advantage, right? So if you're gonna expand outside of Africa, you need to really, study and know what is it that will make you win in that market that you're not being able to win on the African continent.
All right, thanks. We have 2 questions from Shady. Shady, I'll ask you to maybe ask the first question, and then we will wrap up because Andreata will need to dial off at 5 p.m. her time. So please go ahead with your first question.
Okay, you are hearing me?
Yes.
Okay, excellent. I think I have something wrong with my webcam, so I'm sorry.
No problem.
Okay. So thank you so much, Andreata, for this insightful session. I'm so proud. First of all, I'm talking from Egypt, from Cairo.
I saw the pyramids.
Yes. Actually, I'm a civil servant, and I'm working in the Ministry of International Cooperation. And recently, I'm so proud to be nominated for this round in Future Africa Forum. So my question is about, we have a lot of progress in entrepreneurship business in Egypt and communities, and we have a lot of great potentials related to this. We have a lot of growing small and medium enterprises, and we have a great scale up for some business and sort of investments. So I have a lot of track record in development work, because I'm working closely with different agencies, UN agencies. So I'm related somehow to rural communities and micro level of investment. So you know about rural finance and rural credit. So about venture capital, there is a potential, but how about microfinance from your perspective? As we have in Africa a lot of development work, and this is a developing countries and so on. So this is my first question. And the second question, is in particular for Egypt. So you mentioned that you have future plans for Egypt. So what is your business plans for this? Thank you.
Sure. No, I think you know, thanks for your question. I think in regards to microfinance, there's certainly a place for it, and it's, you know, quite developed in many of the African countries, because they are, you're right, you know, they're focused on the rural community, also the urban communities as well, and they're playing a role in a space that us as venture capitalists would never be able to play a role in, right? So there's so I think in the continuum of availability of capital, I completely agree that microfinance does play a role, especially with SMEs. SMEs, smaller businesses, again, businesses in rural areas. So I think there is potential there. In regards to our plans for Egypt, I mean, I think this is a discussion that we're still having as a team, you know, in terms of when we think about our next fund, what's our thoughts around Egypt? Because what has happened is over time, so when we raised our first fund, Egyptian companies were mainly going to the Middle East or the rest of North Africa, right? But what we've seen over time is that Egyptian companies are coming down south into the continent. So if you think about Swivel, for example, that has launched in Kenya, and then there are a few others as well that are thinking about kind of the African opportunity. That also becomes, you know, there's an intersection between our strategy and that, because we can support such a company in sub-Saharan Africa. You know, we can't support that company in Beirut, for example. So I mean, it's an ongoing discussion within our team in terms of kind of what's the role of Egypt. And I think there are also some venture capital players in the market. I think, and Egypt is really opening up, and more and more opportunities are coming up. So we're quite excited, and we're in touch with, you know, lots of VC funds like Algebra that are there in Egypt as well. So it's an ongoing conversation, and it's an exciting market.
Thank you so much. I will beg your indulgence for 2 to 3 more minutes for the final question, which is about your career specifically. We've talked a lot about risk. So what role has risk played in your career choices and trajectory? And I guess what advice would you give to people in the forum at any stage of their career?
Sure. Risk. I think to an extent, so when I joined TLcom, we were raising our fund. So the risk, in fact, our team actually, we feel we're entrepreneurs in our own rights, because we pioneered one of the first large VC funds on the continent. And so there was a risk that we would not raise. And for a long time, I mean, 3 years is a long time to be going around the world looking for capital. So for a long time, you know, we wondered, like, are we, you know, at some point going to disband because other funds have disbanded? And in fact, when I joined TLcom, that was one of my thought process, like, okay, do I want to leave this stable M&A job that I'm doing to pursue this interesting, exciting opportunity? And what I resolved is that, first of all, like where I was, like nothing, I always say, like nothing bad would have happened, but nothing good would have happened. Like, you know, nothing completely exciting would have happened. And also I figured if I joined TLcom and this, if this failed, my goodness, like the amount of education that I have consumed, it should help me get another opportunity somewhere. Then the issue is not me, like the issue is the system. So to me, I think it's probably the case of the people in this forum. Like, you have a lot of experience, you have a lot of just knowledge and that you have, and expertise, that if you tried something risky, the worst thing that would happen is it failed, then you do something else, right? So I figured, you live once, let's try this and see if it will work out. because you can always get up and try something else. So that's how I reasoned it, and thankfully it worked out. But there were times,
Yeah.
things were tough.
Yeah.
There was another piece of the question. You said risk and
Advice for people on the forum at any stage of their careers.
sure. I think for me, in all honesty, sometimes people ask me, how did I get into VC? I'm not one of those people who knows, like, I want to be a doctor or I want to be, X. For me, it's more, I'm driven by my passions, which I stated at the beginning. Like, I'm quite excited about supporting entrepreneurs, Africa, about investing, about private sector development. So the work that I've done has been around those kind of themes and passions. So I've sat on the same table, but a different chair. So, at the Africa Development Bank, I was giving capital to funds like mine.
Yeah.
At where I am, I'm giving, funds to entrepreneurs. At Horizon, I was supporting entrepreneurs. So it's really just being driven by those themes, and then seeing what opportunities are coming your way, and taking advantage of those opportunities. So I think it's maybe just the advice is to think a little bit deeper, and I'm sure most of you already know this already, but just what are your passions, what drives you and excites you, and then what opportunities are being presented to you, and what's the bigger goal in regards to the impact on the continent, and the impact you're making in the society and in your community.
Thank you so much. It's been a really great hour with you. Thank you for the time. Thank you for your indulgence and patience in answering our questions. And we look forward to following what you're up to, what TLcom is up to. And yeah, all the best for everything that comes next. And thanks to everyone in the community.
Yeah, thanks for the time. Thanks for listening. Yeah, it's hopefully one day we'll meet. But right now it's just a list of names. But I'm sure you're fantastic people because you're part of this forum. It's been a pleasure.
Yeah, fingers crossed. Everyone who wants to turn on their camera and say bye. Thank you so much, Andreata.
All right.